Whenever I'm making an investment into the Dubai real estate market or advising a client on their investments, it's all about managing risk and maximizing profits. The key to making a smart investment in the Dubai real estate market is more than just following the hype. The real smart investors follow where the government infrastructure and businesses are moving, because this is the fundamental backbone of a safe investment and where you have real trust in the area's growth. So in today's video, we are going to be talking about the importance of structuring property investments around key major infrastructure. In this video specifically, we will look at DIFC and how we can strategically plan property investments to benefit from the huge growth that we're seeing within this area. DIFC is the fastest growing financial hub in the world and is a majorly important player in the Dubai economy for attracting businesses and high net worth individuals from all over the world. And for those of you that are new to my channel, my name is Matt. I'm a real estate consultant here in the UAE with a background in economics and the financial markets. All of my details will be in the description for you if you want advice when investing into the Dubai real estate market. So let's start by actually talking about what DIFC is. So the location stands for the Dubai International Financial Center. It's a special economic free zone and rapidly growing financial hub. The zone is very unique because unlike everywhere else in Dubai that operates under Sharia law, DIFC actually operates under its own independent legal system based on English common law. Now, it's very important that you understand this independent legal system because it's the backbone of DIFC's success. It attracts global institutions, family offices, and corporations because it provides a trusted and internationally recognized legal framework that allows these institutions to feel more confident in the laws and business environment they are operating in. This is the legal framework businesses would be operating under in London, New York, Singapore, but with better tax efficiency, safety, and access to global markets. It's the fastest growing financial hub in the world, and commercial space within DIFC keeps an occupancy rate above 98% all year round, which is the highest compared to any other area in Dubai. With that being said, the Dubai government has confirmed that DIFC is expanding and becoming DIFC 2.0, which will cover an additional 13 million square foot of land next door to DIFC to cater for the huge demand that the area is seeing from businesses wanting to set up in that location. It will also be operating under the same DIFC free zone laws. If you've been to the UK, think about Canary Wharf in London. It's where you've got all your high-end restaurants, high-end hotels, and rooftop bars. This is exactly what DIFC is like in Dubai. It has the best entertainment, food and beverage facilities for the high-end corporate professionals to enjoy. It's a very high-end area. But now, obviously, we need to think about this from an investor's perspective. How can we actually benefit from the huge growth in the fastest growing financial hub in the world? And how can we actually structure our investments around this area to benefit from this growth? I will do a separate video about commercial real estate, which is coming soon, so make sure you're subscribed. So like I said, all the hype is around the new launches and marketing campaigns, but the real intelligence lies in identifying scarce products that are high in demand, and in this case with close proximity to DIFC, to attract all these working professionals and to actually counter on the growth that we're seeing within this area. It's simple supply and demand. Like I always talk about, scarcity because it creates a fundamental value that safeguards your investment and provides you with the potential for significant capital appreciation, especially when it's high in demand. Exactly what we've seen in the likes of Blue Waters, Emaar Beachfront, where there's a limit in supply and the demand is very high. We see the prices surge uncontrollably. And especially because of the amount of new launches that are in Dubai, we want to be investing into something that's unique and will always hold value. So what do I actually mean by scarce products with a good proximity to DIFC? I'll give you some examples of what I would sort of be looking at. Firstly, we can look at coastline or waterfront property with proximity to DIFC. Now, coastline property in Dubai makes up for less than 6% of the overall supply of all residential units. And it's always in incredibly high demand. I think of it this way. If you look at any major city in the world, London, New York, Singapore, coastal or waterfront property always has a big premium. I recently actually studied a report from Knight Frank, and in Miami, it had the biggest premium for waterfront property at 94%. That's nearly double the value of inland property, strongly pushed by the all year round weather and beaches, which is similar to Dubai. It's a premium area for wealthy individuals in the city to reside, and also a finite asset because you can't keep building coastline property. The land is very limited. It's great for the type of audience that are working in DIFC and downtown that want that premium lifestyle. And especially in Dubai, it also has an increased demand from tourists who are always looking for a waterfront holiday. So your tenant base actually opens up to not only just the people that are living and working in DIFC, but also tourists. And here's where the strategic advantage comes in for me. I'm specifically looking at areas like Maritime City and Dubai Islands. These, in my view, are prime examples of new infrastructure benefiting the investor. The new Infinity Bridge and other road expansions have dramatically improved connectivity, making these waterfront locations a 15-minute commute to DIFC. This is a value proposition that, in my opinion, is unmatched, because where else in the world can you get home from a long day working in a major financial hub like DIFC or Canary Wharf or any of the big financial hubs, and where can you be on the beach or the coastline within 15 minutes? Aside from this, these areas are also in the very early stages of development, which is reflected in the price per square foot gap between established coastline properties that are 50% or even higher in value and actually don't have as good connectivity to the major business districts of the city. But again, when I'm talking about these areas, Maritime City and Dubai Islands, it's really not as simple as just choosing any project or even any unit within these locations. We have to be strategic. We always have to choose specific projects, look into the floor plans, look into the unit typologies, the view, and all the different intricate details that will affect the return on the investment. Especially because in these locations, Dubai Islands is a great example. I'm not too keen on all of the developers that are working there, and I'm very selective in choosing buildings that aren't close to developers that I'm not trustworthy in. Because when you invest into a property, you're not just investing into that building, you're also investing into the buildings that are coming in that location. Because if your building is amazing and then the building next door isn't as appealing, that's going to devalue the actual value of the building next door to it. So we have to be very selective, study the master plans, study the unit types, like I say, and then we can make a proper investment. Obviously, if you want to reach out, my details will be in the description, and we can go through the projects that I strongly believe in these locations, and then we can narrow it down into looking at the best one that fits your needs. But let's move on to the next one, because secondly, another scarce asset that I see direct benefits from the DIFC expansion is villas and townhouses with proximity to DIFC. Now, a lot of my clients are already aware of the supply and demand imbalance for this specific asset class in Dubai. But for those of you that are new to my channel, villas and townhouses coming to the market in the future represent less than 10% of the overall supply. That's coming to the market. And now, second to this, we've also got to look at the demographic now in Dubai. It's changed since what we were originally seeing, because before we used to see a lot more couples and individuals that are building their careers, coming out here to earn money. But now we're actually seeing a lot more families with children that are pushing the demand for bigger spaces. And villas and townhouses are perfect examples of this. An example of the demographic shift is that in 2005, there were actually only 5 international schools in Dubai, but now there are over 230 of them. And don't forget, they're all private sector schools that are built purely to cater for the increased demand in schooling. And they all actually have big waiting lists at the moment. It's not a case of there's lots of availability for schools, because the demand from families to put their children in schools is increasing. And off of the back of that, it shows us the demographic shifting towards families, which means the demand for villas and townhouses and bigger spaces over the next few years is going to be increased. Then compare that with the limited supply coming to the market, and it looks like we've got a good investment. So having a premium villa or townhouse with proximity to the major business districts in Dubai is something that I see a lot of value in, because it's a scarce asset class, high in demand, and also obviously for the working professionals, they have easy access there. Maybe working professionals with family that need bigger spaces. These are going to be very big in demand as DIFC continues to expand. So to wrap this up, a key takeaway here is that DIFC is not just another part of Dubai's growth story. It's the backbone of Dubai's global positioning as a financial hub. And with DIFC 2.0 on the way, it's an opportunity to align your property investments with this growth. Remember, it's not about chasing the hype or the latest flashy launches because there is so many of them. It's about being strategic, focusing on where the scarce assets in prime proximity to where the real demand is being created. Whether it's waterfront living with a short commute time or premium townhouses and villas, which we've discussed has a bigger demographic shift towards that area and it's limited in supply. These are the two examples that I've given today with the proximity to DIFC. There are obviously different asset classes that also will benefit from the expansion of DIFC. I can go into more detail about these asset classes. Once you reach out to me, we can generate a full report and see which one makes sense for your financial goals. But if you found this video helpful and want more data-driven insights into the Dubai real estate market, make sure you subscribe to my channel, turn on the notifications so you don't miss the next video.